Kelly, you know what's really interesting about this stock and about this earnings season in general is that because sentiment is so negative, what we're seeing is companies like this rallying ferociously after earnings. So I want to be clear in the fact that I don't think that Snapchat is any kind of amazing company, but I do think that because the sentiment is so weak, they have space to run. When you look at how they performed on earnings over the last 8 quarters, the majority of the time they beat, and actually they've had massive moves post earnings multiple times. So when I look at the technical pattern right here, you can see that we're breaking to a new recent high. There's also a big gap fill around the $20 to $21 price point. With the incredibly high implied volatility in this name, I think it makes sense to come in and sell puts, because I think that if the news is anywhere better than expected, it's most likely going to continue to break through 16 and trade up onto $20. So I think it's worth a trade.
Yeah, and as you said, and maybe it's obvious and maybe it's not, but you don't think it's ever going to reach that $83 price point again. Julia, anything you'd add to that? And what is the kind of bigger macro signal we're looking for here? Can a company like Snap tell us the state of the ad market at this point?
Well, look, I think it's been fascinating to listen to Evan Spiegel talk about the deterioration of the ad market. And this is a company that went from very fast revenue growth up through February 24th of this year, and then saw increasing challenges starting with that Russia invasion of Ukraine. And they really saw that impact accelerate over the course of the year. So I think there is this hope for the rest of the companies that are ad supported that we might get some insight into these macro trends. But despite those macro questions, Snap is unique in a lot of ways, and so we'll see whether they can use that uniqueness to their advantage and build on some of their relationships, such as with the media companies, et cetera, with the premium content that they're putting ads on, or whether they sort of get dragged down into some of these other issues, such as those ad targeting and measurement headwinds.
All right, we'll watch those daily active users. Ladies, stay right there as we move from Snap to Verizon, a kind of new tech, high valuation, to old tech, low valuation. Verizon shares are down about 9% this year, but falling 3% today in sympathy with AT&T after AT&T lowered free cash flow guidance and its shares are down 7%. Julia, now what for Verizon?
Well, look, this is an incredibly competitive space. These are two rivals, and it makes sense that when AT&T would issue such warnings that Verizon would move down in sympathy. The question is whether Verizon issues similar results and also similar warnings. A couple interesting things to note from AT&T that we should be watching for Verizon. It's subscriber additions, specifically this particular kind of lucrative mobile subscriber, postpaid phone subscribers. In the first quarter, Verizon actually lost 36,000 in that category, while rivals AT&T and T-Mobile both added hundreds and thousands. So investors are looking for growth there. And then there's this question about small and medium businesses. That's a sector that's under pressure. It's typically a very positive sector for all of these telcos, particularly during the pandemic. So we'll see what they give us in terms of those numbers, but also in terms of any ability to raise prices, any price elasticity there. And then one thing I just want to mention is that AT&T said some of their subscribers are taking more time to pay their bills, and that's impacting cash flow.
Yeah.
That does seem to be reflecting macroeconomic issues, Kelly. So we'll see how much Verizon sees that same issue.
That was a major headline. Absolutely, Julia. And Danielle, you think they might have done them a favor? AT&T might have done Verizon a favor here. Why?
I do think they might have done them a favor, because what we've seen through AT&T is they've already announced the issues that this particular industry group are facing. And so, you know, it's highly likely that Verizon's having the exact same issues. They're probably going to announce something similar. Because the stock has already fallen today, I just think a lot of that move is going to be priced in, unless they have something to say that's, you know, completely shocking. I would expect this earnings move to be a little bit more of a non-event. Right now, we're sitting down on, you know, about the 44 price point. You have about a $2 expected move on earnings. I think that as long as they can hold 43, 44, it's at a key area of support. This isn't a high growth stock by any means, but earnings are relatively stable. The dividend is relatively stable. I don't see any reason to sell it, but I don't really see any reason to buy more shares either.
Yeah.
So if you're a shareholder, I would just stick the course.
Stable seems to be the watchword. Look, the PE is below 9. So to your point, for a dividend payer and with the uncertainty in the macro, Verizon may have a leg to stand on here. Let's move along then and hit Amex before we go, because the Dow component is up 8% in the past week as they contend with that consumer that still seems to be spending, but for how much longer? Kate Rooney is here with the story for us. Kate?
Hey, Kelly, that is the big question. Consumer spending, and this is going to be the first of the credit card names out for earnings, very much a bellwether for the rest of the payment space. We'll get Visa and MasterCard next week. Cross-border payment is the big thing, cross-border transactions. It tends to be a higher margin part of the business for all of these card companies and really has been the bull case. That recovering, people traveling again, spending in Europe, and consumer spending in general. So anything Amex says here on cross-border payments is going to have huge implications for others in the space and the other credit card companies. Next week, watch that consumer spending as well, any of this discretionary spending and any signs of a recession. The credit card companies in the prior quarters have said we're not seeing it yet. Will that change this quarter in the second quarter? And we'll get a read in the high-end consumer in particular. Morgan Stanley actually downgraded AXP a couple weeks ago and blamed lower expectations for spending for that high-end consumer. They talked about inflation, and that's starting to hit wealthier consumers, not to mention the stock market right now. They tend to be more invested, that cohort in the market. Hasn't been a great year for equities, so that's been another thing people are pointing out. It's weighing on their pocketbooks. What's happening here with the high-end consumer? We'll find out more for Amex tomorrow.
Kate, you're in the building.
I know.
You started talking. I go, I hear her. She's right over there.
I hear an echo. I know, Callan, right across the room.
Very exciting. All right. Danielle, that downgrade was a biggie a couple of weeks ago. Did that help lower expectations for the quarter?
I think it did. I think a lot of the news that's come out over the past 3 or 4 weeks has really helped lower expectations going into earnings. And when you look at the overall pattern on this chart, I mean, obviously it's down, it's trading lower. The daily chart trend is not looking very positive, but I think the stock is falling along with the rest of the market. If you look at the longer term weekly chart trend, I would actually say it's quite positive. And the fact that they've actually increased their dividend just about 2 quarters ago. When you look at the way that Visa and MasterCard reported the last 2 quarters, American Express as well, I mean, all 3 of them have done well. I think that in this environment, yes, obviously we have to consider consumer spending, if that's going to wane. But the fact of the matter is that these credit card companies, I mean, what we are seeing right now is that consumers are being forced to put more purchases on credit cards at higher interest rates due to inflation and the current economic circumstances. So I actually think that, all 3 of these companies, particularly American Express being my favorite, are really good long-term winners. And if this stock could break out above 150, I think that's where it would reverse the trend and head back onto the upside.
And it's at 148. Danielle, let me ask you this. If we're starting to see better stock action at precisely the time we see worse headline flow from these earnings reports, does that tell you we're bottoming?
I'm not looking for the bottom, but I do think that at least over the course of the next week or so, we are continuing to head higher, particularly just because sentiment has been so negative. And what we're seeing is that we're seeing buyers come in when the expectations are already priced in. So I am on a short-term basis starting to do some more purchases, trade more to the upside. I don't think that the bottom for the year is in, but at the very minimum, a lot of these earnings reports are providing a lot of trading opportunity and shorter term opportunities, especially to the upside.